So Salesforce has been making headlines with its focus on artificial intelligence and its impact on the company's workforce and business strategy. Now, here's the latest. So due to AI, Salesforce's CEO announced that the company has cut 4,000 customer support jobs, reducing the support workforce from 9,000 to 5,000. He also stated that the reduction was possible because of AI agents now handling 50% of customer conversations, with humans managing the remaining half. Now, the company plans on entering into the IT service management market, challenging existing players like ServiceNow. With that said, Salesforce's new ITSM solutions will be built on Slack and will focus on a hybrid human and AI agent architecture. Now, Salesforce's stock has faced pressure despite strong earnings report. The company's stock fell after its Q2 earnings, even though it did beat on revenue and profit estimates. Investors' concern seems to be stemming from the company's cautious forward guidance and the perceived slow revenue impact of its AI products such as Agentforce. Now, JP Morgan says that the economy is slowing slowly, but we're not yet in a recession. Take a listen.
Dow, S&P, NASDAQ, though, hitting some record highs again today. David Kelly joins us here at Post 9, JP Morgan Asset Management Chief Global Strategist. Good to see you, David. Thanks for coming in. It's funny, one of the quips today is, well, we no longer have to worry about the split between the soft survey data and the hard data. Yeah. They're kind of converging here.
Yeah, that's right. I mean, we always look at the jobs market as a mosaic, but all the numbers this week were telling us it's getting softer, and we know it's getting softer. And part of it, the issue is a lack of demand, but there's also a lack of supply because of the immigration crackdown. And that's why we're getting these very weak payroll prints. But what's going on is, the economy's not in recession yet, but it's slowing slowly. It's very consistent across all the data. It just shows this economy it was always a bit of a tortoise, and is now a tortoise that's pretty much out of breath.
All right. Some are throwing in, say, construction spending down year on year as another recessionary signal. When do you think that hits some kind of critical mass?
Well, when we talk about recessionary signals, the most important thing is don't think about this like the pandemic recession or the great financial crisis. Those were mega recessions. We are sort of slipping slowly into this here. I see the market is up to date. I think that is, that's obviously reflecting the fact that we think we're going to get some rate cuts out of this, but that's not going to fix anything. The most important thing that I think the administration needs to realize is if you cut rates here, you're going to cut the interest income of retirees. You're going to tell people there are more rate cuts coming, so why borrow now? Let's wait and see. The whole history of the 21st century is rate cuts don't stimulate growth. They didn't in any way after the great financial crisis. So don't look to the Fed to bail out the economy. It can help the stock market, and that's what we're seeing today.
No, it can help. It can bring rates. It can bring mortgage rates down. It can bring. That's been a headwind.
Housing is 4% of the economy.
Well, it's already. Look at the 10-year yield has gone to 4% today.
Yes, but the housing is 4% of the economy.
Now, last week I said if Nvidia could not stay above 169, then look for a pullback to 165. Take a listen. So current support for Nvidia is going to be at 169. If the stock cannot stay above this level, then look for a 3% pullback to 165. Looking at the current chart, you guys can see that my analysis on Nvidia was 100% accurate. So back on August the 28th, I did say if ticker symbol SOU and Soundhound could stay above 1231, then look for a 5% run to 1320. And if the stock could get above that level, then look for a 12% run to 1406, which it did hit on its second breakout. Take a listen. Now to the upside, if Soundhound can stay above current support at 1231, and I want you guys to look for a 5% run to 1320. And if the bulls can break above 1320, then look for a run to 1406. Now let's jump over to TLT, the 20-year Treasury Bond ETF. So I had to go ahead and share this one with you guys because what I see right now is a great buying opportunity for the 20-year Treasury Bond. And based on my analysis, my price target is going to be at 137. So with that said, we're looking at a return of over 55%. Now, going into the rest of the video, I have some important levels for you guys to watch on Palantir, ticker symbol PLTR, BROADCOM, ticker symbol AVGO, and ticker symbol TTD, the trade desk. Let's go ahead and start with Palantir, ticker symbol PLTR. So current support for Palantir is going to be at 150. If the stock cannot stay above this level, then look for a 6% pullback to 144. And if 144 failed to hold as support, then look for a further pullback to 137.60. Overall, to the downside, I'm looking for a pullback to 131, and from from current price, we're looking at a decline of 14%. Now to the upside, if Palantir can hold above current support, then I want you guys to look for a 5% run to 161. And if buyers can get the stock above 161 and use that level as support, then look for a run to 169. And from current price, we're looking at a return of over 10%. Overall, to the upside, there is a possibility for Palantir to head to new all-time highs at 197. And from current price, we're looking at a return of over 29%. Let's now go ahead and take a look at the trade desk, ticker symbol TTD. So from recent highs, the stock is down over 63% and is providing investors with a great buying opportunity. With that said, current support for trade desk is going to be at $50 per share. If the stock cannot stay above this level, then look for a 7% pullback to $48. And if that level breaks, look for a further pullback to $45 per share. And from current price, we're looking at a decline of 13%. Now to the upside, if the trade desk can stay above current support, then I want you guys to look for a 8% run to 56.50. And if the stock can break above this level, then look for a run to 60.44. Now, if buyers can push the stock above 60.44 and use this level as support, then look for a further run to 62.60. And from current price, we're looking at a return of over 20%. Overall, to the upside, my long-term price target for the trade desk is going to be at $86 per share. And from current price, we're looking at a return of over 66%. Let's now take a look at BROADCOM, ticker symbol AVGO. So current support for BROADCOM is going to be at 329. If the stock cannot stay above this level, then look for a 5% pullback to 315. And if that level breaks, look for a further pullback to 304. And from current price, we're looking at a decline of 8%. Now to the upside, if the stock can stay above current support at 329, then look for a 5% run back to 352. With that said, I'm overall bearish on the stock and I'm looking for a 27% pullback to 247. Alright guys, if you liked today's video, go ahead and leave a thumbs up, and if you'd like more accurate price predictions, then consider subscribing to the channel. As always, thanks for watching and I'll see you guys in the next one.